We are here today to talk more about missing middle, and we've got Ilias Galinéas, mortgage specialist at RBC Royal Bank, and we're going to talk a little bit about the process and what it's like to finance a multi-residence property. Ilias, thank you for chatting. As always, it's a pleasure to chat. I always learn new things every time we speak.
Well, thanks for asking me to participate in this.
What kind of clients are you seeing purchasing, missing middle properties? Today we're talking more about sort of multi-unit residential properties, but what kind of clients are seeing purchasing those kinds of properties?
Mm-hmm. I would say for the most part, the clients that I see purchasing those types of properties are more mature individuals that are purchasing as investment properties. So they might already have their own primary residence or vacation property or whatever other kind of property, but this one is strictly for investment.
And I would say on the real estate sales side, it's the same. We're starting to see more people think about multi-unit properties as something to live in, which is why I sort of jumped on this topic and started to advocate a little bit more for it, because I think it's it really is an area or a gap where we could see more people become homeowners by utilizing income in their properties. So I really wanted to talk today, sort of jump into a little bit about what the process is like to finance a multi-resident property.
Yeah. If I could just interject, I think to your point, one of the reasons that I don't see that many clients looking at purchasing these types of properties is because they probably have never thought about it. So, I know you talk to your clients about this type of option, and otherwise they may have not even thought about it. So I think it's a good option for many clients.
No, and that's a really good point, because what we're trying to do sort of with these little mini videos and some of the activities we're doing is bring awareness around the concept of missing middle, both from being able to build them, having them accessible on the market, but also how they can be used as a tool for home ownership. But that comes with a whole pile of other things that people need to be prepared for, of course, because you also have to want to be a landlord, of course. So to dive in, to talk a little bit more about the financing of multi-unit properties, because of course that's, very different than just trying to go out and qualify for a single family residence. So can you tell us a little bit about what that process is like?
So with any investment properties, the bank considers those types of property a little bit higher risk, especially these days, within the era of COVID, where there's a lot of uncertainty and, rental income issues and instability, etc. So when the bank looks at providing financing for these properties, there's a number of things that they look at. Normally, they want to see clients that are that have primary income coming from a regular employment. And then on top of that, we can add the rental income, which helps people qualify sometimes for this type of property, especially if they're buying it as a place that they're going to be living in too.
Right. And actually, that's something that, even when we're talking to clients, not always do they realize that having, rental income actually can help them qualify for a mortgage.
Yeah, definitely, because we do factor in the rental income as part of the qualifying equation. And even when the property or units are not rented, we look at market rent. So basically, we do a property appraisal, which includes market rent. And normally there is a range of potential rent, ranging from the lower to the higher. And what the bank does is, RBC anyway, is we take 80% of the lower end of that market rent. And that's what we use in helping clients qualify for financing.
Which, and so that's one of the elements that, we want to sort of touch on in our missing middle discussions is, for those individuals who are maybe finding it hard to sort of make that jump into home ownership, or, maybe moving from a condo into a house, considering a multi-unit property, particularly if there's, say 3 or 4 units where they're living in one of the units, renting out 2 or 3 of them for, market rent, that can be give them a really big jump on their pre-approval, but also help them with their monthly expenses. So it's not, such a shock jumping into home ownership.
Yes, absolutely. And you reminded me of another facet of this type of transaction, and that is, well, with any type of purchase transaction, and that is the down payment. So, traditionally we can lend up to 80%, up to a certain limit, depending on where the property is. But we also have the option of going in high ratio with 10% down. So, most clients that purchase this type of property, and again, it depends on the purchase price of the property, because as you know, if it's over $1 million, then high ratio is out of the question. It's not an option. So client needs to have a minimum of 20% down. Otherwise, if it's below $1 million, then they could potentially put 10% down if they're living in the property. If they're not living in the property and it's 100% investment, then the minimum down payment requirement is 20%. RBC is one of the few banks that finance up to 5 and 6 unit properties under our residential lending mortgage program, which makes a difference because it is far more affordable than doing it through the commercial side of banking. So we do basically, single unit right up to 6-plex. Now the 5-plex and 6-plex properties have a couple more restrictions, but it is something that we also do quite often. And I thought that was an important thing to mention.
For those who are, thinking of actually, using it as an owner-occupied property, and they're under that $1 million range, which I know in the city core it's kind of hard to find, but in some of the suburbs, they can exist. And if you find a property that has an apartment built into it, that could actually help you, on the qualifying. Now, one of the things we've often talked about when we're talking about clients and income and using this is that distinction between legal income and registered apartments versus those that are not. And, another part that we're really going to be advocating for as part of the missing middle discussion is really getting the city on board with helping people and encouraging people to want to build units in their homes, even if it's a basement apartment, but do it through the legal permit process, because that makes a difference. Certainly on the value, it's certainly on the safety side, but from a financing perspective, that's a distinction, right?
Absolutely. I think RBC and most banks always feel more comfortable, if not absolutely necessary, that anything that we're financing is legal and complies with all the standards and municipal requirements.
What are some of the benefits that you see to people owning multi-unit properties?
Well, it's a good investment for starters. I think we talked about lifestyle. So, even if we don't need the income to qualify the applicants for the financing, the fact that they are receiving this income allows them to do, possibly much more in their life, depending on, eventually travel or, things like that. And then also, like you said, they are filling this gap of the missing middle and providing housing where it might otherwise not have been available. The other thing that I've been hearing is multi-generational occupation of properties, and like parents, for instance, that are getting older, or kids that are younger and maybe not able to find their own place immediately, which, is becoming pretty difficult. So here you have a situation where potentially you could have, the parents, the middle, and the kids living all in one building, but separately. And, everyone pays their share. So I think that's a great option as well for many people.
And it's actually interesting that you mentioned that, because when we, talk to friends or clients that are from other countries, particularly some of the Latin American or European countries, that concept of, living together in flats in the same places is something that's very common, yet it's a really new sort of idea to Western world, and perhaps something that we have to embrace a little bit more in our urban cities. Well, Ilias, thank you very much for chatting. It's certainly a topic that I am very excited about, and hopefully other people start to learn more about. And if anybody has questions about purchasing income properties or multi-unit properties, they can reach out to Ilias, who'd be happy to chat a little bit more about your particular situation.
Absolutely, and thank you again for inviting me, Philip. I hope what we've discussed has been helpful, and as always, I love speaking with you.